With me today is Blackbuck Resources CEO Justin Love. Justin is also an oil and gas investor, 40 under 40 class of 2019 alumnus. Thank you so much for joining us today, Justin. This has been a very challenging past few months. I know that goes without saying, but can you put in perspective for us how Blackbuck Resources finds itself really kind of in a different stage than some companies? Why is that?
Sure. So first off, Jessica, thank you so much for having me on the show. I appreciate it. It's my first Zoom interview, so I'm a little excited.
Thanks.
Challenging couple of months. It's been a lot. It's been very unpredictable, very volatile, especially for our sector. Blackbuck is fortunate in that, timing is everything, and we have a unique background as a company in the midstream water space. In particular, we started formally in 2018 when we funded with our partners Cressa in Dallas, and we were basically evolving from a service company to a midstream company at that stage. And at the time, I had been thinking about water midstream for 4 years and have followed water through since the first shale boom, and there was a bit of frustration that we may be a late entry. And, we've been fortunate in that. Being a late entry has allowed us to, focus on, some greenfield projects, and they kept us really busy through this tumultuous time. And, while most of our competitors were out doing large M&A style deals, we were focused on nuts and bolts services and then building our greenfield infrastructure. And through that timing, at this stage now, we've been able to learn from our peers' mistakes. The contract structures are continuously evolving. We're a very young sector, and so we've had the benefit of seeing these things play out. We've also had the benefit of, without doing large M&A, not taking on any debt. And so without debt in this market where the opportunities largely rely on M&A, we're very well positioned to grow.
That is good to hear. And you mentioned, of course, I guess, at first the concerns of possibly being a late entry, but how that's helped you up until now. Really, how has the team at Blackbuck come together in the past few months to develop a plan to solve near-term issues to keep on top, if you will?
Sure. First and foremost, our focus was on keeping our employees safe during the pandemic. We early on developed and adopted, several policies and guidelines to ensure that we could operate, keep everybody safe while doing so. And then we focused really on just excellent execution. We had drilling operations underway on a project out in Culberson County, and construction associated with that facility. And, we really just focused on getting it done. Once we had everybody, under the new guidelines and procedures, excellence and execution is how you help your customers. So that's what we did.
Speaking of helping customers, what is Blackbuck Resources really doing to support customers as they're shutting in wells? What kind of water concerns do you have in the process of shutting in and during the shut-in? What are your thoughts there?
So from a shutting in perspective, really what we focused on, we gather and dispose of produced water. We also treat produced water to be recycled in completions. And so obviously that service kind of treatment side was first to slow as completions slowed down with the price environment. What we've really done is work with them, very collaboratively on our cost structures. We've used the downtime, if you will, with lowered intensity of operations to focus on operational redundancy, which will, in a comeback, provide them with better flow assurance.
I guess that's really kind of given you an unexpected time to reset or rethink, I guess, certain parts. So what about when people are ready to restart their wells?
Yeah, that's right. I mean, when they're ready to restart, you got to be there to take away the water, and if you don't, then they can't produce the hydrocarbons. And so we did use that time to focus on redundancy. We did a lot of operational testing, kind of like a war games, if you will. And we just so happened to be building our newest and largest state-of-the-art facility during that time. And so it was it was it's one of those things that you think it's misfortune. It was actually fortunate time for us to go in and enhance our ability to execute.
Justin, let me ask you about opportunities. Are you still able to find some during this time in addition to what you just mentioned, and where, if so?
Sure. So, we started as a services company. I would say that just first off, largely those are diminished right now. Standalone services as related to water management are generally we're without, contractual structures that lend themselves to continuing in this type of environment. But we do see opportunity abound, particularly on the M&A side. The operators that we partner with, the E&P companies, they were already in an environment where investors were demanding positive cash flow, and you couple that with the pandemic and the ensuing demand decrease, and they really were in a cash crunch, and so our opportunity to help them is through their divestiture of their water assets. Most E&Ps historically built their water infrastructure in-house, and that water infrastructure would largely be overbuilt for peaks and underutilized. They didn't focus on commercializing the water business. The water business was their business, and so you're not necessarily sharing with your peers. So for us, our biggest opportunity right now is to come in, find those captive assets that are underutilized, and find ways to get cash to help correct and beef up the balance sheet of our customers, and focus on lowering their LOE over time, so that they can return cash to investors as is expected. And secondarily, on the M&A front, again, I think all the opportunities today are largely M&A. Secondarily, we look at our peers, our competitors, and there's some that have grown quite large, potentially taken on debt that they have to service, and have contract structures that may have certain, I don't want to say weaknesses, but potential challenges in this type of unforeseen environment, unprecedented environment. And we have the opportunity to kind of work hand in hand with them to say, hey, do you have non-core assets over here? Let's help you with your balance sheet. Let's help you with the debt. As I said, us not having debt right now and a very supportive private equity group behind us, we're out looking to buy, essentially.
Justin, have you seen an uptick in any water issues for customers or companies who are producing, but neighboring wells have shut in? If we go back to that area as well.
Yeah. I hear things. I'm not a downhole person. I've heard things about shutting in wells and then turning them on. I haven't heard much about shutting in wells where your peers are producing, or where your peers have shut in wells and you're producing. Anecdotally, I can say that I was with a customer last week, runs a public E&P, and they were saying that they have some data showing positive well results in terms of shutting in a well and then kind of turning it back on, actually seeing better, EURs and lower water cuts, better economics. That's just one data point, kind of anecdotal. For me, that's not necessarily a good thing. I mean, if it's good for my customers, it's good for me. But obviously, less water, better for them. A little bit worse for me as a company that sequesters that waste.
Good, interesting take there. And if we can look into the very near future, I guess, as far as how time goes, what forward risk do you see as we head closer to the fall and the November election, but really just getting through these next few months as well?
So just getting through these next few months, our industry, our sector, and our industry as a whole faces, risks every day. First and foremost being the safety of our employees, and second being protection of the environment. So, daily we do everything we can to improve our ability to protect the environment and enhance the safety of our employees. From an election perspective, there's definite risk out there. I think it's a bit disappointing to me, for the sector as a whole, given the reduction of emissions achieved through replacement of coal with natural gas, given the energy independence we've achieved through unconventional production over the last decade or so. I see a bit of vilification rhetoric out there on our industry as a campaign point, and I think that I'm a believer that science will prevail, and that talking points and sound bites aren't necessarily always how things will play out. But it's not something that I think executives in our industry don't lose sleep over. So for us, moving into the election, we watch the issues closely. We have the lobbyists, we have lawyers, we understand law and what an administration has the ability to do, and what Congress has the ability to do, and what local, state and local governments have the ability to do. And so we stay on top of that, and we try to operate in a safe and environmentally friendly way, and do our best to improve that as we move forward every day.
Certainly. Thank you for that take, Justin. And if I can ask you a final question, as a leader in our industry, what do you see as the path forward from here? Expanding a little bit more on what you've mentioned, but for the water midstream sector, but also the industry as a whole, what do you see, or what do you tell your employees, as we try to figure out how we move into 2021?
Sure. So I'll start with the broader industry. We're in a very unique time. I think that let's call it the U.S. unconventional oil and gas business is particularly strong in the Permian. I think it's here to stay. I think we will see it bounce back, as it always has. I think that the makeup of the business may change a little bit, and we've seen this over the last several years as shale has kind of played out. You've seen what I called internally the corporatization of West Texas, or the Permian, New Mexico included there. You see big, large-scale players that can do pretty well economically through economy of scale. Turning on shale production is still fantastic in terms of returns in a normal price environment. It's the best new production you can bring, in terms of its economics and its efficiency. But I think we'll see larger players, larger kind of factory style operations, as we hear it called in the media. And for the water midstream sector, I think, it's a similar trajectory. We're obviously much younger as a subsector of the broader energy business, and really are only less than a decade old ourselves. And so what we've seen is that water historically has been seen as a service. Water management, the E&Ps build the infrastructure, they operate their water. Like I said, their business, the water business is their business kind of thing. We're seeing a shift of increased sophistication, including us as an example of that. Our ability to evaluate from an E&P's perspective is, I think, second to none in the industry. We have an incredible development team. We run our own E&P analysis before we go into any deal, thinking about how we would manage the water. So we kind of put that hat on, and I think our competitors are going to be moving in the same direction. You're going to see larger water midstream companies that are more sophisticated and act more like your conventional G&P midstreams. And I think from there you'll see, potential IPOs. You'll see players that are, long-term low yield investors coming into the mix for our business, pension funds, diversified infrastructure funds. I think you've seen some sovereign wealth come into the business. You've seen some of these things. It's been a lot going on just right ahead of this kind of downturn. And I think as we come out of it, that stuff will start back up. Our business is unique in that we're tied to energy, but we are a green business, if you will. We sequester hazardous waste. We enhance E&P's ability to recycle water and preserve that water as a resource. So I think that, if there's been any secular changes, water midstream will be a hot place for investors to put money, and I think these companies will continue to grow and like I said, get more sophisticated.
Certainly hope to see that, and wish you all the best of luck and success. And I appreciate the time that you've taken with us to share your insight as well, Justin. Thank you so much.
And thanks so much for having me, Jessica. Good to see you.
You too. You're very welcome.
For more Hart Energy videos, follow our social media channels.